What is going on, guys? It is Kieran from Gen Z Finance. So you're wondering what the best and safest Canadian dividend stock is out there? Let's talk about it. Alrighty, guys, so let's talk about the stock we are going to be talking about today, and that stock is the one and only Enbridge Incorporated, guys. Now, this is a company that is trading now at an $84.43 billion market cap. So now, guys, this is a big boy company, and it is almost one of the largest gas companies that transports gas to people's households in Canada. Alright, guys, just going to give a quick overview of Enbridge here. Not going to bore you with all the facts, but it was established in 1949. Enbridge is North America's premier energy infrastructure. So they transport, distribute, and generate energy. They have diversified assets that include a balance sheet between crude oil and natural gas, and as well, they're expanding renewable business. So they are a gas company that have been beaten down. That being said, though, they do generate great revenues, and they're a cash flow machine. Their numbers have been hurt a little bit here during the pandemic, but we'll cover that later on in this video. And as well, they do pay a nice juicy dividend. Enbridge is trading a little rich here, but now they do pay a dividend of 7.77% or $3.24 per share, which is very big, and that's a very juicy dividend to be paying out. Enbridge is an absolute beast for a company that is trading at a 43 PE ratio, but is paying a 7.77% dividend. Now, guys, this company is also down from its 52-week highs from $57 a share. Remember, this is Canadian dollars as well, so that'll convert to around $45 to the US dollar. Oh my god, I cannot get enough of this company. Look at that dividend growth over the past 9 years. From 24 cents a dividend every quarter to 81 cents a quarter. Imagine holding this stock in 2011 and you're getting that stock appreciation price as well as the dividend appreciation, which would be unreal. They're continuing to grow revenues. This dividend is going to increase quarter over quarter if COVID is a thing or not. Look, guys, 2019, 73 cents a quarter. Next quarter, they're paying 81 cents. Next quarter, we're going to be looking at something even juicier. I'm expecting 90 cents per quarter, which would be absolutely beautiful. If we even get 85 or even 84 cents, an increase is always beautiful. But look, in the previous quarters, they do sometimes pay every 6 months the same amount of dividend before increasing, which isn't an issue either. I'll be happily accepting 81-cent dividend per quarter. This says it all itself. 11% annual growth rate on their dividend over a 25-year period. Unreal growth beast. So I'm sure lots of you are curious on if I'm holding any Enbridge, and yes I am. There it is showing up right up on the screen. I hold 55 shares of this monster. I just started buying this company around a month ago, so I got in around $39 a share, so my average cost is $39.16. So for a total value of $2,292. This is 11% of my portfolio, which is beautiful. So total return right now is only $140, so I'm up 6% on this position. I'm probably going to continue to buy this stock in the 40s to the 45 zone. If it does dip, of course I'll be buying the dips. You guys know me, I'm always buying the dips. So yeah, man, this one's going to pay me almost, or just about $180, so about $15 per month, which is great cash flow for me considering my portfolio is only $20,000. So that's fantastic. I'm generating around just about $100 a month in cash flow dividends, so that is fantastic. I'm on great track there. Let's take a look at the early months of 2020, how the company was performing during COVID as it first hit. So 2019, December 31st, great revenues, great net income, sitting at $842 million right there. So March hits, net income absolutely obliterated, net loss of $1.3 billion. July hits, revenues start to rebound there at $8 billion. Net income of $1.7 billion. Absolutely insane quarter for Enbridge. They're back on track. Dividend is still being paid even in early March as well, which is fantastic. Now they're just rebuilding the revenues. So right there, next quarter on September 30th, right back up to $9 billion in revenue, and their net income took a little dip there, but still total of $1 billion in net income, which is cash flowing beast. Glad to see Enbridge back on track after oil demand started to tick up here in the future months, but March oil went completely negative, tanked absolutely. So obviously we're going to see a net income loss right there for Enbridge during those times, but now it's ticking up slowly. As you can see, net income is increasing and net revenue is increasing as well. Look, guys, like right before COVID, these guys were on their growth machine. Every year they're increasing almost $1 billion net income on the bottom line. It's almost 30% growth. 2018 to 2019, over 100% growth in net income on the bottom line. Man, this company is a machine. And right before COVID, they were growing numbers substantially. 100% in 1 year? That's unreal. Guys, this is the time to buy Enbridge, and it is now or never. This is the time before their business starts to boom again. This is the perfect opportunity you get. As you get a 7.77% dividend yield, you are getting an absolute steal. And I'm just looking at this company in 5 years, man. This company is going to be making a lot of money. And it's gonna be great for a lot of shareholders holding these shares from now to 5 years, because that dividend is going to appreciate, and as well as that stock price, you can expect that to be a lot higher than what it is today. We got analysts expecting a 7.6% sales growth next year, and guys, a lot of us can say that we think that may be a lot higher than that. Now, guys, the company isn't perfect. Their current assets are down due to COVID right now, and their big payoff and that net loss that they did occur in the March period. And they do have just about 11 billion in current assets. But guys, take a look at this. That is down substantially from last year, which is fantastic. And that just shows you that they were fine in 2019 and they'll be fine in 2020, even with a better current ratio than they did have in the previous year, sitting at about 0.60. So that's reassuring for a lot of shareholders there. So that's probably the biggest imperfection on the balance sheet there. They have good total assets to total liabilities. I'm not worried about that at all. It's just the current ratio. On our risk level, it could be a lot better. All right, guys, let me know if you guys are going to pick up any shares of Enbridge or are holding Enbridge already. Guys, on our risk reward level, I believe this stock is a very safe investment. They support many millions of Canadians in heating homes with their gas, transporting gas around the entire country, powering lots of things throughout Canada. They're very essential for Canadians. The government won't let anything happen to this company, in my opinion. The stock is listed on the TSX, and as well, if you're in the United States, you can buy this stock on the New York Stock Exchange as well. Thank you so much for all of you for sticking to the end of this video. I appreciate all of you guys that stick out to the end. It shows that you love my content, you appreciate the content, and you enjoy the content, which makes me really happy in the end. So again, I thank each and every one of you for sticking to the end. If you guys have any questions, don't hesitate to ask me any questions on Instagram or anything like that. Even PM me, I'll answer all your questions. These videos are up for you guys to learn as much as possible and take as much knowledge as you can from these videos, because that's literally what I made this channel about, is to document my journey and teach everyone who's just starting to invest and show them like what exactly is very important to look for in companies and what's a safe investment from a non-safe investment. So that being said, guys, have a great day.